Caution, it started. Ray Dalio is the founder of Bridgewater Associates, the biggest hedge fund in the world, and the author of Principles, Life and Work, wherein he outlines his investment philosophies and corporate management skills that he has refined over decades as an investor. As a worldwide macro investor with over 50 years of experience, Ray has made a considerable amount of money predicting and playing the long game. In this video, he describes the process that occurs again and again in the economy and provides a framework to understand how this dynamic will operate. According to him, understanding historical cycles allows everyone to identify warning signs in order to predict what comes next. Hi, you've reached Finance Sense, the place where we discuss all the most recent trends in the financial markets and the economy. But before we get started, make sure to give this video a thumbs up, hit the bell notification button, and subscribe to our channel so that you can stay up to date with our new videos. Having said that, let's get started. It's like a disease that happens over and over again. There's a process. This is what Ray Dalio stated as he talked about the process that keeps happening in the economy. According to him, everything that unfolds in the economy has a reason, and by knowing the cause and the process, also known as the economic red flags, you can determine if individuals can pay their loans back and how the dynamics will operate. When there is a particular rate of debt growth that cannot be maintained for an extended period, it will be difficult to pay it back. When interest rates get close to zero and you begin to have a debt crisis, the Federal Reserve's or the central bank's capacity to address the issue will be ineffective. According to Dalio, the last two instances in which the Federal Reserve was unable to address a debt crisis were from 1930 to 1931 and 1928 to 1929. Similarly, a debt crisis and 0% interest rates occurred in both 2007 and 2009. During these periods, the central bank had no choice except to print more money and then use it to purchase various financial assets. Now, this act of printing money drives up the price of financial assets, injects money into the economy, and triggers the kind of reaction that we're currently witnessing. As per Dalio, these financial transactions often benefit individuals with financial assets more than those without them. It leads to a greater disparity in wealth, which in turn fuels populism. Therefore, Dalio argues that our ability to technically understand how that dynamic functions enables us to successfully navigate it. Dalio continued by pointing out that the beginning of the debt cycle is the greatest phase of the cycle because money borrowed is invested in assets that will be able to pay back the debt and grow, and simultaneously, asset prices increase as a result. When everyone starts projecting how much those assets increased in value, the economy then enters the bubble stage. When a bubble is present, the debt cycle often reaches its peak. From this, the Federal Reserve or the central bank starts to tighten monetary policy in an effort to slow the bubble. Furthermore, Ray Dalio said, as we look at the economy, we're getting closer to the debt cycle's peak. I don't think we're there yet. I think we're in the 7th inning. When that tightening occurs, the turndown follows. I'll call it the depression phase. This depression phase, described by Dalio, occurs when interest rates reach zero and become less effective than monetary policy. In terms of this long-term debt cycle, Dalio stated, in my opinion, we're quite late in the longer-term debt cycle and the business cycle, but that does not mean imminent. I think that this will take another 2 to 3 years. I'm not sure, but a downturn will eventually occur because recessions inevitably follow downturns. We're in a situation where it's harder for the central banks to turn things around because interest rates are close to zero. In addition, Dalio believes that the wealth disparity and the populism issue are far greater now than they were in the past. They set a course for tightening interest rates, as well as the rate at which they will tighten and raise interest rates. However, the Federal Reserve veered off every course they had previously laid out. In other words, they tightened monetary policy at a pace that was far slower than they had anticipated. However, Dalio feels it was smart since it demonstrates that the Fed's own decisions are being appropriately scrutinized. When interest rates reach zero, the debt issue takes on a new form and the economy is more likely to enter a depression. To illustrate this, Dalio compared the debt crisis that occurred from 1929 to 1932 and 2007 to 2009, both of which had reached zero interest rates. According to Dalio, there is only one thing central banks can do throughout each of these periods: print money and purchase financial assets. This increases the value of financial assets, creates a lot of liquidity, and widens the wealth gap since those who hold financial assets benefit more than those who do not. As a result, the wealth disparity widened and the economy has not improved, giving rise to populism. Therefore, when we look ahead and wonder when the next downturn will occur, we will experience a new kind of downturn that Dalio believes will be quite similar to the one that occurred between 1937 and 1940. Now that the Fed and other central banks are starting to tighten monetary policy to various levels, we are currently in that phase of that cycle. Additionally, asset values are susceptible to changes in the central bank's monetary policy because the length of those assets is lengthened. Thus, when raising interest rates, central banks must tread carefully to avoid going over the rate built into the curve. Meanwhile, when considering the next recession, Dalio says we can expect something significantly different from the one in 2008. It will be one in which there will be more significant social and political problems. In his subsequent statement, Dalio stated, "I also worry about the effectiveness of monetary policy because monetary policy has interest rates, and we can't lower interest rates as much, and it also has quantitative easing, the purchases of financial assets to push out other financial assets and get liquidity into the system. So when we experience a downturn, it won't be as effective." According to Dalio, it won't only be debts that will cause a downturn in our type of debt crisis. Pension obligations, healthcare obligations, and unfunded obligations will play a role too. All of these obligations will be difficult to fund, and Dalio believes it will result in a dollar crisis rather than a debt crisis, as well as a political and social crisis when Americans are forced to sell a large number of treasury bonds, and some will be unable to purchase all of them. Additionally, when interest rates become too high and credit becomes more difficult to obtain, Americans borrow less, which weakens the economy. Therefore, from a foreign standpoint, when they examine those treasury bonds being offered on the market, they are more concerned with currency depreciation than inflation. Thus, bonds become more affordable as the currency depreciates. Dalio believes that at the moment, the Federal Reserve will have to print more money to cover the deficit and monetize more, which would result in a decline in the value of the dollar. According to Dalio, you easily can have a 30% depreciation of the dollar during that time, and the fiscal stimulation that we're seeing is coming at a greater rate of capacity utilization. On the other hand, having a positive mood is not indicative of the future. Since bubbles are built from euphoria, they surely feel the best, right? According to Dalio's current assessment, the implementation of the fiscal stimulus is a positive development. Corporate tax reductions increase productivity, and as a result, businesses receive large amounts of cash that are sufficient for the time being. And when the stimulus has run its course and is beginning to taper down, but borrowing continues unabated, the borrowing will enter the market at around the same time. Moreover, according to Dalio, it is essential for each individual to understand how cycles operate. Investors can choose to try to time the market and be active investors, but only some of them will be successful at it. Therefore, Dalio generally advises investors to refrain from actively seeking to invest. However, if they do, they must act against their natural instinct. Knowing how to maintain balance in one's portfolio is more essential for Dalio than simply purchasing when there is blood in the streets and selling when things are good. Thank you for watching thus far. Please leave a like, subscribe to help us expand our future audience, and comment down your thoughts in the comments section. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe and look out for the next video.